Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.
It's Friday. Welcome to another episode of the Tech Behind FinTech. I'm your host, Nnamdi Osuagwu. As always, great to be joining you guys. Today's episode, we're going to dive into the Android banking Trojan that's taking over financial apps. Before we get into that, as always, we're going to dive into some news. And let's knock out some housekeeping. Okay, first off, comments. We are streaming live from LinkedIn, YouTube, Twitch, and Facebook. We also have a feed going from Instagram. See my man CB just joined on Instagram. What up, bro? Okay, let's see where we are going to start today. I have a lot of news to cover, so we want to get through it all and dive into the main topic of the day. So let's start with some business news that's happening across the industry. Then we're going to move into a cybersecurity threat. This new botnet that's going around, malware-as-a-service, interesting story. And that will be our show today. As always, excited to be here. And without further ado, let's jump into some topics. All right, first, Mastercard is acquiring Swedish AI cybersecurity startup Baffin Bay Networks. Let's look into what that is dealing with in our show notes. So Mastercard plans to integrate Baffin Bay's automated threat protection technology into a single cyber service, along with Mastercard's own Risk Recon. So they basically have Risk Recon, and they're adding this new technology onto their platform so it can be delivered as a single cyber service. I know that they offer that to them. Interesting enough, I mean, most people obviously know Mastercard for their credit cards, but they do offer cybersecurity services through some in-house stuff and acquisitions that they have acquired. The move is aimed at improving Mastercard's ability to protect its customers globally from cyber threats such as malware, ransomware, and denial of service attacks, which have increased by 22% in 2022. Baffin Bay is claimed to have a proven track record in mitigating or preventing costly and potentially catastrophic cyber events. Mastercard's president of cyber and intelligence, Ajay Bala, believes that Baffin Bay AI tech will provide customers with faster, smarter, more effective cybersecurity protection. Baffin Bay's founder and CTO, Joachim Sundberg, believes that joining Mastercard will enable the firm to expand its ability to safeguard against application and network level attacks globally. In 2021, Mastercard acquired CipherTrace, Arcus FI, and AI to enhance its cybersecurity measures. Hey, thanks for joining. All right, let's go on to the next. Rippling raises $500 million following collapse of banking partner Silicon Valley Bank. So let's talk about that, right? So Rippin is a payroll and spend management fintech company. So let's understand the background here before we dive into it. So their payroll, spend management, they have their accounts in as Silicon Valley Bank. Silicon Valley Bank obviously got taken over by the FDIC, stopped at the time, right? Stopped all withdrawals from their for their customers. So they had to make payroll. So Rippling had to extend $130 million to fund customer payments to their employees after the FDIC takeover of Silicon Valley Bank. Despite the FDIC's assurance, $545 million of Rippling's customers' money was still locked up at SVP. So they have to basically scramble at this point. Like they're a payroll and spend management company. So companies basically, their customers utilize this fintech to make payroll for their employees. So this was an emergency situation, but they were able to raise $500 million from Green Oaks in a Series E funding round. So Green Oaks previously funded them, valuing the company at $11.25 billion, the same as the Series D in May 2021. So later on, the company recovered all the funds from SVBP. So So now, after the funds being recovered, they hold close to $1 billion in cash. So they just raised $500 million. They had $545 million locked up. So now they're sitting in a little over $1 billion in cash between those two situations. But yeah, and you know what? Next week we're gonna have a special guest on, CPA in the financial world, and we're gonna really dive into some of the things and regulatory issues that led into the run of a bank, into the SVP issue, and just cover things in general around that. So it should be an interesting show. All right, let's move on. It was a really good article written in the Harvard's Business Journal, and took a summary of it. So I want to go through it regarding the Silicon Valley Bank issue. Let's go through it. Before I go through it, I want to give credit to the author because it was a really, really good article. Paul Gompers. I think I'll try to pronounce his name. So let's go over some points that he outlined here. So Silicon Valley Bank, they're focused mainly on VCs and startups. So concentration in one sector increased the risk. It was a major factor in SVB's collapse. Diversification reduces idiosyncratic risk. SVB's focus on venture capital and startups allowed it to offer tailored products and services to the industry. So let's just pause right there, right? Because that's interesting. Because you have the saying, their riches and niches. So this was a particularly niche organization, lack of diversification. Had obviously it's always easy to play Monday night quarterback. That's why we're gonna really go through it next week and dive deeper. But just going through this particular summary of this article, because they were so niche and focused, it allowed them to offer tailored products and services to the industry. SVB's deep relationships with both VCs and companies provided important networking opportunities for entrepreneurs and investors. SVB collapse will likely lead to the sale of various pieces of the bank to multiple buyers, which will affect startups negatively. Banks will step in to do the various pieces of what SVB did, but Silicon Valley Bank's decades of embedded knowledge on the people and networks formed will virtually be impossible to replicate in pieces. SVB's failure raises difficult questions about the role of mid-sized specialized banks. What I'm saying, it's an interesting dynamic, but I think besides just the niches around there, you have to kind of look at certain compliance standards that may have not been met. And like I said, we're going to dive into that next week. The best option for preserving value is to sell the bank in its entirety and have the bank continue offering the kinds of services it historically provided, by much less risky balance sheet. So it was an interesting article that he wrote. Obviously, his opinion, but I wanted to talk about that. But like I said, we're going to dive into the Silicon Valley Bank and just in general running the bank topics next week in our show with a specialized expert around there. Okay, main topic of the day. I feel like getting a drum roll. There's a new rising Android banking Trojan targeting 450 financial applications. So let's get into that. All right, so let's just go over a few technical terms before we dive into it. So, so the first one is a banker Trojan. So this could be considered a banking Trojan. Basically, it's a piece of malware that attempts to steal credentials for financial institutions' clients and gain access to their financial information. So it's targeting clients of financial institutions. You know, malware stands for it's like malicious code used to do bad things, right? In this case, extract and steal some information, financial information. Next thing, botnets, right? So essentially, a botnet is a network of private computers infected with the malicious software and controls as a group without the owner's knowledge. So, your computer or CPU or resource can be part of a botnet network. So you would have code deployed on it without your knowledge, but it's being used collectively to like a distributed network of systems to invoke attacks. So those are kind of some tech things to take reference to. Now, last terminology before we dive into this, malware as a service. So okay, so you heard of malware before, you heard of malicious code. We talked about it, but what if there were developers basically building a platform, like how you can buy software as a service, or you heard of that, like SaaS applications. This basically is they build it and then they charge other threat actors to leverage it to get some money. So they get their, I think I saw a number 3,000 a month. So they essentially, somebody will pay for this service, then use it to for attacks. Why do they do this? So they don't have to build the whole thing themselves. The same way we buy software to make things easier. So they're buying basically attack software, or in this case, malware as a service. They sign up as a subscription, and then they invoke some attacks. I know some years ago we did a show on that, malware as a service. I should have dug it out before the show, but I didn't. I could just talk about it now. All right. So that's some background information regarding this Nexus app. Now, let's go through the summary real quick. Oh, by the way, this is the interface. My understanding, pretty sleek. All right, so the Nexus Android banking Trojan is being promoted as a new botnet under the malware as a service business model, like we just talked about. The Trojan can intercept SMS messages, steal credentials, and target roughly 450 financial applications. The question is, how does it do that? And we're also going to go into like how to safeguard against this type of threat. How does it steal information? I mean, it has to, the actual malicious software has to be downloaded on your device. So it can be downloaded through phishing apps, through, and we're going to talk about that. Go to a website, you download something, email, some non-approved applications, and so forth. Nexus is promoted as the new Trojan. That's the name of it. But there are connections with Sova banking Trojan that point to the code. So essentially, Sova was another malware as a service tool, right? So like anything, right? You have code. An open source community does this in regular world, right? You can leverage it. You take it and you modify it, and then you rename it to something. So that's what in this case it looked like that was done. They used the Sova code as the banking Trojan Sova as a foundation, added some nuances to it, came up with Nexus. Nexus is specifically designed to conduct account takeover attacks and can steal two-factor authentication codes delivered to via SMS. So if the actual malware is on your phone, on your device, or something like that, where you're getting an SMS message, it can steal it. How does it do that? Which is really interesting. They use the accessibility function. So, a lot of these devices have accessibility functions for people with disabilities and so forth, and they're leveraging those functions to basically steal data. The malware developers added to Nexus the ability to delete received SMS messages and a feature to enable and disable 2FA stealer modules. So, cover up their tracks essentially. Nexus developers manage the malware and data collecting operations from a centralized interface that provides information on affected devices and the botnet status. So, yeah, they have some sort of central dashboard that they're leveraging for these activities. The panel also allows the malware operators to create custom injections targeting applications of 450 different financial institutions. The developers appear to be working on enabling encryption capabilities, either to hide its malicious activities on infected devices or in preparation for a ransomware module. Like anything, they're upgrades. So they're looking for different ways to infect the systems and invoke further havoc. Okay, let's see what else we have here. So interestingly, right, so the Nexus authors have laid out explicit rules to prohibit the use of its malware in these following countries. As by Jajan, gonna kill me on a replay, Armenia, Belarus, Kazakhstan, Moldova, Russia, Uzbekistan, Ukraine, Indonesia. So there's a few countries where they're essentially built the SaaS service, and now they're saying they have rules of engagement. So you buy their malware-as-a-service, not buy, but subscribe to their malware-as-a-service. They have explicit rules on where not to use it. So now the question, the obvious question, how do we protect ourselves? So I kind of went through this experiment myself. So, let's go back to this. So how do we protect ourselves and stay safe from this Android malware? So obviously there's other malware. So if you have an iPhone and use the App Store, this one isn't for you, but it's not saying that if you have an iPhone that you might be clear for this one, but there's other malware or issues that you can also have, but it's not this particular issue. So number one, side loading apps by installing an app without going through an official app store like Google Play Store can put users at risk. So, when you download applications and things of that nature or apps on your phone, you just want to go through official channels, go through the Play Store. Similarly, Apple has the App Store, but you want to kind of get the apps through there, because apps that are uploaded, they have to go through some sort of vetting process and so forth. The next is Google Play Protect should be enabled on Android smartphones to scan malware. So if you should have this on your phone, but if you don't know, if you never access Play Protect, just go on your phone. If you have this, once again, this is for Android users, and go to the Play Store and type Google Play Protect, and you should be directed to the Play Protect screen, and it'll scan all your apps. So I experimented with it and put a screenshot below. Obviously, if you're listening to this on a podcast versus on one of our webcast stations, you're not going to be able to see my slides, but essentially go to the Play Store. There's probably other ways to access it, but type in Play Protect, Google Play Protect. It's not an app you download. It should be already there if it's enabled. And then you can, it should be scanning in the background, but you can run the scan manually. So, similar to a Microsoft Defender for the apps. So it's like an antivirus for your apps. So another thing, users should be careful when installing a new app, read reviews, do research, and avoid apps that seem too good to be true. So even if it is on the Play Store, read the reviews, see what people are saying. Has anyone else had an issue with it? And mind you, these same rules can be applied to iPhone users in the App Store. Same concept, right? You don't want to use jailbroken phones or get apps that are not in the App Store for your iPhone users and so forth. Like I said, this particular banking as a service malware Nexus is specifically targeting Android malware, but that does not mean there are not other malware attacks that cannot be conducted on an iPhone. So similar ways to protect yourself should apply. And I think that's it for us. Yeah, so one of the things that comes up sometimes, especially because we talk to fintechs and we talk to, hey EJ, we talk to shouting out some people that join on Instagram. Things that come up, right? Like some big questions come up, some follow-ups. We're sponsored by Strategic Generation, cybersecurity firm that offers cybersecurity, SOC 2, and pen testing related services. Feel free to schedule a meeting. If you have any questions around cybersecurity, around pen testing, around SOC 2 compliance, we're going to start keeping a Calendly link in our show notes. So you can click there, schedule a meeting, let's touch base and figure things out. It's particularly for your business though. So you need to have a business email and one of the industries that are supported when booking a meeting. And if not, we'll just let you know. But if so, we'll book the meeting and so forth. So there should be a Calendly link in the show notes. I think that's it for today. Once again, next week, we're going to really dive into the run of a bank and just get into those type of terms of, obviously Silicon Valley Bank is going to come up, but we just want to understand, the history of it. How does it happen? Why did it happen right now as opposed to all these years? What are some of the laws, the regulatory things that were put in place or moved in the last few years that can cause something like this? So I'm going to dive into it with an expert. So I'm looking forward to that show because I have some questions myself that I like to dive into and explore further. I'm going to look right around for see any comments or questions, but it looks like that concludes our show for today. As always, I really, really thank you guys for tuning in. It means the world to me for supporting me in this effort and in our Tech Behind FinTech. We've been at it this is our third year, actually. So it's pretty exciting stuff. Looking forward to bringing on a host of guests this year, starting next week. And April is going to be our SOC 2 month. So that's going to be interesting. Every week, we're going to dive into SOC 2. So if you don't know what SOC 2 is, wait till April. But it's basically a compliance framework from the AICPA. But we're going to go into various aspects from it because, we're going to have a CPA on and so forth. So it should be great. One of our main viewers, Jeffrey Martin. Happy Friday. Any chance you can share the link for that Nexus malware? Of course I can. Let me get it right now. Nexus malware. Hey, Jeff, I just shared it, but I don't know if it's I shared it through my tool. I don't know if it's posted on LinkedIn. So let me just add it to the screen so you can have it. So it's Hacker News, the Hacker News. You can take a screenshot of that. I'll leave it up for a second and you can visit that website. Really good information on the history and stuff on why it's happening and where it derived from and so forth. Hope that helps. That's the thing. Like sometimes I need to stay on for a little bit because I noticed that after the show I start hopping off, but then people start having questions. So if you ever have questions and I hop off, just get it to me, DM it to me or so forth, and then we'll cover it during the next show. I have some joiners on Instagram. Hey, Alex, Lou, thanks for joining. Appreciate it. But that is it's pretty much our show. I'm gonna stick around because, like I said, sometimes people drop in comments after I go and then I miss it. So hope you got that link, Jeff, regarding the Nexus malware. And once again, next week should be a very interesting show. So bring all your questions. It's going to really be about like the run of the bank, talking about obviously the Silicon Valley Bank issue, but I'm just diving in overall around the type of climate that could create a situation like this and why it occurred, ramifications, and so forth. Bringing on an expert in the financial side of compliance, CPA for many large banks. So next week should be very, very interesting. So guys, listen, I think that's it. And also we'll reiterate for fintechs, insurance firms, also firms interested in SOC 2. If you have any questions on that, want to learn more, want to get some strategy sessions, we're keeping a Calendly link in our show notes so you can access it there and book a meeting. And I think it's 15-minute slots, and let's talk through it. So once again, it's cybersecurity related, pen testing, SOC 2 compliance, and whether you're a fintech, whether you're in another vertical but interested in SOC 2 or those things that we mentioned, definitely drop a line and book a meeting. Once again, this show is sponsored by Strategic Generation. On that note, I think we're good. So everyone, have a really, really enjoy the rest of your day and have an excellent weekend. Cheers. I'll see you next week, Friday, 12 p.m., same time, same bad channel. Bye.
Understanding the technology that powers the money is essential. Knowing the business drivers that inspire how the money is made is crucial. Bridging the gap between the mind of the technologist and the mind of the business is monumental. That is what TBF is all about. Let's start this never-ending conversation. It's time.